The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe Biden Current Show with Steve Sedgwick and Ben Boulos. These are your headlines. AI jitters loom over another blockbuster set of results from Nvidia, while Salesforce shares come under pressure after its revenue forecast comes in below analyst estimates. Both Jensen Huang and Mark Benioff brush off concerns.
I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms.
When I looked at our price yesterday, I'm like, buy it all back. Look at the prices.
The relief rally rolling on as Nvidia's earnings help lift its peers in Asia, sending the Nikkei to a record close after tech shares stateside rebound for a second straight day.
From best to better, Allianz says operating profit could come in as high as 18.4 billion euros this year after notching a record of nearly 17.5 billion in 2025.
The most important company on the planet reporting overnight, and it was a beat, but the market really shrugging it off. 14 straight quarters of beats, so the market used to this, but the fact that the stock didn't tank, I think, has been quite significant for the market in terms of stabilizing some of those fears around the AI story. So the beat that we saw from Nvidia was on both the top and bottom line in the fourth quarter, with revenue at its all-important data center business growing 75% on the year. Guidance was also stronger than analysts had expected, on average, with $78 billion of revenue anticipated for the current period. But those results were not enough to drive shares higher overnight, as investors grapple with concerns around the sustainability of AI demand and the already lofty expectations of some analysts. CEO Jensen Huang gave CNBC his take on the demand outlook.
Demand is really strong and it's diverse. It's coming from all over the place. At the core of it, Becky, what's happening is that AI just went through its third inflection. The first one was 2 years ago with ChatGPT. And then the second one was about a year ago when the reasoning AI agents came out, reasoning AI systems came out. And the number of tokens, the amount of computing demand that it needed to be able to reason and produce all the excellent answers that these chatbots were doing was really sky high. And then now with these agentic systems, we're now having these agents able to reason, take tasks, and actually do work. And so the agentic systems are doing incredibly well all over the world. Of course, you've heard how Claude Code and OpenAI's Codex are doing incredibly well in companies all over the world in software programming, but it's starting to spread out into all these different other types of tasks. And so at the core, it's because AI has gone through a new inflection point and the amount of computing demand is off the charts.
And don't forget, there was some concentration of customers again, 2 customers making up 36% of sales. Now, Huang also weighed in on the outlook for the software sector and whether investors have been right to fear the impact of AI disruption.
I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have. In the end, also, we need the tools to finish their work and put the information back in a way that we can understand, and that we call them system of records. And so each one of these tools have their own system of records. Those system of records exist because we put them there and we use it so that we understand the information that's finally complete. And so those system of records will still be ground truth, and they'll continue to be ground truth. And now the agents will, help. They will use it and they will populate the system of records. They will use the tools that are available on these platforms.
Shares of Salesforce declined in extended trade after the software company forecast fiscal 2027 revenue below expectations amid concerns over demand for business software. But the company cited agentic AI as a catalyst for future growth, raising its 2030 revenue forecast to $63 billion. The company also allocated $50 billion for new share buybacks, with CEO Mark Benioff saying low prices for the group. He spoke to CNBC about the company's newly announced $50 billion share buyback.
You keep telling me how cheap our company is because we're going to do over $16 billion in cash flow this year. Now, I know cash flow isn't real anymore. I read that also on these social media feeds. You know, Jim, revenue's not real anymore. Margins aren't real. Cash flow's not real. RPO's not real. Nothing is real anymore. So therefore,
Mark is being facetious, people.
I am. Thank you for clarifying that, because, Jim, here's the funny part. You got to look at companies, not just ours, but so many others, and go, this is very low prices.
Right.
And so, yeah, we're going to buy back because we are convinced. And, yeah, when I looked at our price yesterday, I'm like, buy it all back. Look at the prices.
I never take for granted the privileged position that I'm in here at CNBC with Karen and Ben, the fact that we just parachute ourselves into the centre of the most extraordinary corporate and business stories. The London Stock Exchange Group is a great case in point. The LSEG Group today has announced, I'll go through a couple of numbers, but the full year total income, £9.35 billion. Full year operating profit, £2.13 billion as well. Pre-tax profit, $1.97 billion. I'm going through some of these numbers so David Schwimmer doesn't have to. But perhaps the most interesting number that some of you want to hear about out there is the fact that there is going to be a planned $4 billion buyback amid investor pressure. And I say about my privileged position because who better to speak to at this moment than David Schwimmer, who is the CEO of LSEG. David, thank you for joining us. I've just referenced to you off camera an article that has just hit the wires in the last 12 hours or so, which says the government and Elliott are talking with Elliott reassuring the government about its intentions regarding the LSEG Group and its stake there. The article says David Schwimmer is expected to publicly address the group's engagement with Elliott for the first time. Is that news to you? Good morning to you. Why don't you just take it away?
Good morning. Thanks for having me. Great to be here. We just put out our numbers a few minutes ago. Very strong results for 2025. Top line growth, you mentioned the specific numbers, but let me put a few percentages around that. Top line growth of 7.6%. We improved our operating margin by 210 basis points. So great operating leverage across the business. We're seeing very strong demand for our data through our new AI channel partners like Claude and ChatGPT. And again, just to remind people customers have to have a direct license with LSEG to get access to that data through those channels. And then we did announce a £3 billion buyback this morning.
$4 billion.
£3 billion.
Yeah.
So just wanted to be super clear.
Okay,
on that.
sure.
Yes. And great results, really firing on all cylinders.
And that is great, but the accusation. The thing is, the shares have come off. We all know that they've come off from. Let's be honest, they've had a great run over the years that I've been covering London Stock Exchange Group as well. But they have come off around about 30% in the last years. And you have this investor, Elliott, which is champing at the bit, telling you what they think you should be doing as well. Do you want to address your conversations with Paul Singer or with Elliott more widely?
So I'm not going to get into the specifics of our engagement with
The FT's wrong, because they said you're going to publicly address your engagement.
I am happy to say we regularly engage with shareholders.
Yeah.
We have a lot of shareholders.
Including Qatar and others as well.
We have lots of shareholders who have been with us for a long time. We have a lot of very smart shareholders. Some of them have different views. Some of them take a perspective that's more short-term. Some of them take a perspective that's more long-term. As you know, we have been going through a pretty dramatic strategic transformation over the last several years that has been going very well, consistently well. We have been accelerating our top line growth over the last several years. We have been improving our margin over the last several years. We have been improving our operational capabilities. We are doing things now in weeks that in years past would have taken us months or in some cases years. So the transformation is going very well. This is also a business that generates a healthy amount of cash flow. And we have always been very consistent with our capital allocation that we're going to invest organically, internally. We're going to consider capital allocation with respect to M&A opportunities. And we've spent about 700 million pounds or so a year on M&A over the last few years. We have raised our dividend. And then to the extent we have surplus cash, we will actively manage that with buybacks. And we did over 2 billion in buybacks this past year. We've just announced this 3 billion pound buyback for this year. That's a healthy amount to take care of, or to address some of the dislocation, take advantage of some of the dislocation in the stock, while maintaining strategic flexibility, because there's a lot
David,
going on in our space.
Let's get to that dislocation in the stock, because everything we've spoken about in recent years being your strength, the data services business, the recurring revenue from data services, has now seemingly become a weakness. And the question is whether the market has it wrong. We heard from Jensen Huang overnight. That was his message in terms of the sell-off. You've seen other sell-offs before, but this one very much concentrated around certain sectors that could be disrupted. What does the moat look like in future? Because your view is that, look, people are still spending, customers are there, they need the licenses. But the market view is that, look, even if the customers need the licenses in future, they might be paying for a cheaper license or a cheaper product because they don't need the full service.
So just to give you an example of how our customers are approaching our business, in the fourth quarter of 25, we had about 1.9 billion pounds of long-term contracts from some of the most sophisticated institutions on the planet. And these, when I say long-term, these are big banks, big asset managers that are looking to have access to our data for up to 7 years. They understand our business really well. They understand their needs. They understand the direction of travel in terms of the AI and how the AI is going to be enabling greater consumption of our data. And they think that our data and our content is actually more valuable in this environment. And then we're actually seeing that. So I'm going to get into this a little bit later when we talk about our results. But we're seeing, through partners like Claude and ChatGPT, financial customers accessing our data with an LSEG license, but through those channels. And it's growing really, really quickly. So we see that as a great new distribution channel, not a disruptor.
The big hope for a lot of players, including for LSEG, is that Anthropic doesn't come after your customer base, that they don't go for the end customer. And that's been the narrative from Anthropic and the like so far over the last number of sessions, the last week or so. But that could change. Technology companies have discovered they have more capabilities than they thought they would have from the outset. Is that a danger at some point?
So we have a dynamic of co-opetition with our customers and our users and our members going back decades. This is not new. And so we have a partnership with Anthropic to distribute our data through Claude. And it's just getting going over the last couple of months. We're seeing great traction. We're seeing similar great traction with OpenAI and ChatGPT. We're seeing great traction in terms of making our data available through Snowflake and Databricks and others. So is there a dynamic of co-opetition in certain areas? Maybe. But from our perspective, and as I said, we can see that with banks over years. This is a healthy dynamic. It's a great new channel for us. We're seeing an extension in existing customers to new teams or new users who haven't used us before, who now want to access us through these channels. And we're seeing new customers come into us through these channels who haven't accessed us before. So great opportunity. Lots of change in the marketplace. People raising questions about, will it mean fewer people doing the trading? Maybe. But the way that we see this developing, and we're already creating the model for this, is that if an agent is accessing our data, that agent becomes a customer. Yeah. And so that's a huge new opportunity as well.
David, if we just get your thoughts on another topic briefly. The reluctance of some companies to list in London. We saw in the budget the Chancellor unveiled a 3-year stamp duty holiday for new listed companies. City AM's reporting that some of the high hopes for that, Zilch and Thought Machine, have both said actually that's not enough. Also today in the paper, Revolut, seemingly quite lukewarm about the idea of a London listing. What do you think needs to be done to turn that around and get companies not kind of shrugging, but really excited about the prospect of listing on your exchange?
So I think all of these factors, whether it's the 3-year waiver on the stamp duty, the reforms in terms of the listing rules, market structure, the changes to the prospectus, a lot of technical things, the improvement in some of the entry into the index, the fast track entry into the index. All of these things are helpful. What fundamentally drives a company's decision on listing is what their own needs are, what their own timing is, their own need to raise capital, and they want to do it into an environment that is somewhere between stable and healthy growth. And stable also applies to macroeconomic, geopolitical stability. So there are a lot of factors there. I think what we're seeing in terms of the IPO pipeline for the UK is good, and it's improved a lot over the last year. We saw in 2025, that was the strongest IPO year since 2021 for London. It was quiet in the first part of the year, but as you know, the IPO window can close and can open. But in the fourth quarter, we saw a lot of activity. So strongest year since 2021. We saw a lot of very healthy activity in what I'll call the secondary market in capital raise, which was close to 20 billion pounds. So the market's functioning very well. Capital's available. And I think companies will make the decisions on all of those other factors that I was talking about, as well as modest help in terms of the waiver of the stamp duty.
Yeah, so the market is functioning well. We'll leave it on that positive note, David. Thank you so much for coming in on earnings day, and I hope we got you warmed up for the earnings call today.
Thank you very much.
And David Schwimmer with us, the CEO of LSEG. Look at the US markets and what we're seeing stateside. The Dow, we saw bouncing 0.6%, and the S&P 500 also in positive territory. Worth noting for the trading week, we're now at positive territory for some of these major boards, even the Nasdaq up about 1.1%. The Asian markets picking up on some of that action from the US markets, and you can see, of course, reaction to Nvidia for those technology names, silencing some of those fears around the AI story. Japanese stocks worth looking at, and also South Korea in terms of the sentiment read-in on the Nvidia story. Both of those markets traveling firmer. The Hong Kong market, though, sliding 1%. What we're seeing in Europe, the European futures, very strong trading session is what we've seen over the course of the month for some of these markets. For instance, the FTSE up close to 6% for the trading month as we talk about all the volatility we've witnessed in the backdrop. Also, French stocks making significant headway too, up about 5+% too for the trading month. What you're seeing as we gear up for the session today, it does look like we're chasing very slim ranges. FTSE futures inclined positive, DAX futures in the opposite direction, Ben.
Still to come on the show, the Pentagon reportedly looks to assess its reliance on Anthropic as a feud continues between the two. We'll explain all. Plus, the White House gears up to host key tech executives with data center power on the agenda. We'll discuss the sector with the CEO of Wärtsilä. And we'll speak to the CEO of Allianz following the insurer's full-year earnings. That conversation coming up later this hour.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Major US tech companies will meet President Trump at the White House next week to sign a pledge that they will supply their own power to AI data centers. A White House official confirmed that representatives from Amazon, Google, Meta, Microsoft, Oracle, xAI and OpenAI will attend, while adding that the pledge is aimed at ensuring that electricity bills for Americans will not increase as demand for power grows. Well, Håkon Agnevall is the CEO of Wärtsilä, and he joins us now. Good to see you. So, you have this ambition of seeking a foothold in the US as part of this data center boom. Is this meeting and this pledge at the White House good news for your opportunities there, or bad news?
I think it's good news. Data centers are growing
exponentially right now. And of course, the access to power is becoming a critical constraint to the whole development. And there is increasing concerns among US consumers that, if we put in our data centers here, prices will go up, there will be lack of scarcity of water, et cetera, et cetera. And I think we will see more and more of the hyperscalers, as we call them, the Metas and Googles of the world, contracting for data center provider with their own power generation. Because then you can have what is called an off-grid power generation. So you feed the data center only, you're disconnected from the grid, and then you will not affect the price level on the grid, so to say. So yes, this off-grid data center power generation, it will grow going forward.
It's a real conundrum, isn't it, for any company that's looking to get a foothold and get a slice of the AI data center build out and the vast sums being spent in the US. Because yes, the opportunity is there, but the tariff situation must make it incredibly complicated.
Well, I think tariffs are there, and in general, stability is key when anybody is investing. So tariffs could be understood, but they need to be consistent over time so people can make their business cases. In our case, we are in the US, so we have a strong US based, but we also export from Finland, and of course we are affected by the tariffs. The market so far is absorbing the tariffs because that's a strong demand on energy, also a very strategic element on the overall US agenda. So I think the key thing here when we talk about tariffs, predictability.
Håkan, we've seen the US president politicize just about everything. In the State of the Union over the early part of the week, he was talking about shielding consumers from electricity prices. Did that language jump out to you as you talk about the critical demand we're now seeing from the hyperscalers and whether there could be consequences for the consumer?
Well, it's how you feed the power to the data center, how you're set up. Of course, if you have a data center that is very well integrated into the existing power system, there could be spillover effects. It depends how much additional power you put into the power system. But I think it's also having a narrative that everybody can understand. And I think everybody can understand that if you have off-grid separate power generation for the data centers, it won't have the impact on the bill of the consumers, basically.
The reality is that we've already seen a huge build out in the data center business, but there's more coming, 630 billion in capex for this year. What does the crunch look like by the time we deploy even more capex to build data centers?
So I think the constraints in the group, and we talked about Jensen and Nvidia, providing the chips for the growth, but the other constraint is also the energy. Where companies like Wärtsilä, but of course there are other providers, we are scaling up, so to say. So I think the supply chain of both chips and energy equipment is ramping up. And I think over time, we will serve the industry as it grows. Not only in the US, and now there is a lot of focus in the US, but I do think going forward we see accelerated growth also in Asia and also in Europe.
Loving the idea of Asia and the Middle East leading the way. We know that Europe is sometimes stuck in the slow lane because of a whole variety of reasons that we've all discussed previously. Yeah. I want to go back to the United States as well. I admire your optimism. I hope you're right. I can't believe you are. Tens of billions of dollars of green energy transition, EV-type projects, battery storage, but whatever, were delayed or cancelled last year because of the loss of tax credits, loss of permits, what have you. Tens of thousands of jobs are being lost in the sector. Tens of billions of dollars are being written off by the big EV players in the United States because of the change in administration. I've seen comments from you saying, regardless of Trump, the energy transition will continue in the States. Håkan, I hope you're right. I can't see it.
Yeah. I can see it.
Well, that's great. That's why you're a visionary and I'm a journalist.
Because if you look at you could say the midsection of the US, the American audience, the midsection, Texas and all the way up, there is actually still a lot of investments in renewables going in. And why? It's about affordable power. I mean, at the end of the day, wind and solar combined with the balancing power to keep the system stable is the most affordable source of energy. Yes, coal is there, but coal is expensive. Nuclear is there, but nuclear is expensive. So it's about affordability. Then it's also good for the sustainability development.
I'm fully paid up. I think this is fantastic. But why are tens of thousands of jobs being lost, tens of billions of dollars worth of write-downs being made in the sector, and indeed projects being shelved?
Yeah. So I think we need to keep the EV car sales development separate from the green transition. The green transition is bigger than electric cars. And if you look at the investments that are being made into renewable power generation, wind and solar, I mean, they're at all-time high levels.
So when I read a headline
even in the US, they're at all-time high levels.
When I read a headline that says, Wärtsilä CEO says US energy transition will continue despite Trump, but at the same time, I see Wärtsilä hit battery storage unit hit by Trump tariffs as well.
Absolutely.
His policies aren't helping.
Yes. Now, battery storage, there you have a different story. Because of the tariffs, it's putting a wet blanket over the battery storage market in the US, clearly so. But battery storage is one tool in a balancing toolbox. Battery storage is not the solution.
Okay.
We need to move away. Green is not black or white. There are no single simple solutions.
Håkan, I've got about 30 seconds because the producers even know I'm doing this as well. But with Europe being so slow with its permitting and regulations and all kinds of barriers, and the US having an ambiguous attitude to it, are we just going to lose the race to Asia and the Middle East?
I think this is something that Europe seriously need to consider, because to your point, I think Europe is moving slow in the whole arena of growing energy. It's moving slow on data center deployment, and it goes back to permitting, not on my backyard, etc. I think here Europe has a key challenge going forward.